We coming here. Wow. Welcome back to Strongman Personal Finance, and welcome to the Daily Clown Report. We are going to talk about Meet Kevin today. We are going to react to a video that he published recently where he figured out all the terrible risks that are coming with the massive CapEx and investment cycle in the AI bubble. I think Meet Kevin, in his infinite genius, has figured out that we are actually in a bubble, and his reasoning for it is the first intelligent reason that I've ever heard. I've never heard anybody give me such a clear explanation about why AI is a bubble. So let's go ahead and dive right in. If you want to support the channel, super chat me, sign up for the membership, and give me tips at Venmo. I need money. I'm poor. So we have Meet Kevin here. He's sitting in his office with his little Warcraft shield in the background. And he says, this is insane. 6 trillion of America is clueless. I guess Meet Kevin here is going to lecture people that have $6 trillion. Is he saying large cap tech is clueless? Is he about to expose the risks of AI? Let's dive in and see.
Are absolutely drunk ducks. I'm sorry to say it, but I went through everything I can get my hands on for Microsoft earnings, Tesla earnings, and Meta earnings, and I have to say, I'm starting to grow increasingly concerned that nobody knows how the hell to make money from artificial intelligence, and they're all losing the plot. Now, I want to be clear about this.
You know, it's kind of funny that Meet Kevin is talking about being drunk, okay? I think Meet Kevin is the expert on that. And, you know, I drink too. I like to drink as well. But to have Kevin stand up here and say, hey, big tech is drunk, that's a little hypocritical there, Kevin, okay? So apparently big tech is just off their rocker. They're insane. They're not making money off of AI. It's over. But I guess who is making money off AI? Of course, House Hack, right? I'm sure we'll get a shill of that.
I've got exposure to Tesla and retirement accounts. I've got exposure to Meta. It's actually been a stock that I thought has been cheap. And I mean, obviously, they're doing really well here in the after hours. They're up like 7%. This is great. We got a course coupon code expiring tonight, but I don't want to talk about that. It's my birthday. I want to get these bottom lines out of here. I'm feeling lost going through these companies because I feel like all of them have absolutely lost the plot. Let me explain this very carefully. First, I'm going to start with the plot loss at Meta. Then I'm going to hit Tesla, and then we'll hit Microsoft. So, Meta. The biggest takeaway that I got from the Meta earnings call was Zuck telling us that we are now seeing that one person with artificial intelligence can do what an entire team used to do before that. And as a result, we are massively simplifying the team structures that we have at the company.
Wow. So you mean that could potentially increase corporate profits in the future? Is that a possibility? And if we want to increase corporate profits in the future by cutting down on wage expense, which is one of the highest expenses, don't we have to make investments now? Huh. You have to invest now for the future. Shocking idea.
Okay, great. So then I'm like, wow, Mark, that sounds fantastic. You must be saving so much money. You must be doing so fantastically on your earnings because you guys are absolutely killing it with actually selling your product. In fairness, quick note here, I don't want to bore you, but not only are they delivering 18% more ads fourth quarter year over year, but they're selling them at 6% higher prices. So both levers at Meta for income, ads, that's how they make money, right? Skyrocketing.
Oh, almost like it's working. Almost like the investments they made in the past, which cost money, will pay off in the future. And it seems like it's working. Okay. Well, what's the risk, Kevin?
That's why the stock is up, because their core business, it's a rocket ship. It's amazing. And as an advertising play, they're cheap and it's a great deal. But then I'm like, wait a minute. Now we should be seeing way more earnings per share growth, because if you could be so much more efficient on your teams, well, then your numbers should be pretty freaking remarkable on the actual earnings pages. And I'm not trying to be a jaded numbnut here. I own the stock. But then I look at this. I got, yes, revenue up 23.7%. Excellent. That's great. I love to hear that. Cost of revenue only up 23.7%. That's way better than Microsoft. Microsoft's margins went down here. But wait, what is this? 40.6% more money spent on research and development?
Oh my God. Meta is spending money on research and development during a massive transformation to the economy. What? Meta spent 40% more on research and development during a massive CapEx AI build-out cycle? What? That means it's not working. Why do you think the revenue is going up, numbnuts? What he's saying here is AI is actually not working because they're currently spending money on research and development and building out infrastructure for the future. But right now, it's not working. But it also is working because you can see the evidence with the revenue. But it's not working, right? The profits are down right now. The profits are down right now. But if this was house hack, he'd be like, well, see, I'm spending more on R&D, but in the future, I'm going to make more profits. So if this was house hack's financial statements, oh, this would be perfectly fine. And logically, it makes sense. It's a huge investment cycle. Whoever wins the AI race is going to make mega profits, but it has upfront costs. Yeah, sometimes when you make an investment, you got to pay money up front. That's how that works, Kevin. Wow, it's a bubble.
Well, wait a second. If we're getting so much more efficient with the teams, why are we blowing all of a sudden compared to last year 40.6% more on research and development? Something doesn't reconcile here. It's either
maybe they're spending a lot of money on top tier talent, Kevin, so they can win the AI race. Yeah, if the goal is to massively reduce headcount and juice corporate profits in the future, and you have to develop the technology to eventually get there, it's going to cost money now. It's not reconciling. Wow.
we are getting more efficient, and now we're just deciding to blow our money on the metaverse or glasses or whatever, which is entirely possible, or building super intelligence, or it's not true that they're getting much more efficient with what one person with AI can do. Now, I believe that it's likely Mark Zuckerberg is just kind of lost. And this is normal. He did this with the whole metaverse thing, which was a complete flop and a disaster. The advertising business makes so much money, though, that even though he ends up spending some of the stuff like a drunken sailor while he's looking for a solution of how they're going to make money with these new super intelligence models, he's probably wasting a good chunk of that money. So you almost have to, I'm picking from these three companies, you almost have to look and go, okay, well, maybe Tesla's doing better. Maybe they're not going to spend money like drunken sailors. And then I heard things on this earnings call that I've never heard them say. Well, frankly, I shouldn't say never, but I haven't heard them say in years. Tesla now, rather than just hinting at doing a terafab, is actively suggesting that they're considering raising debt to build a terafab. That's because even though
I saw that and I'm so excited. Now, Meta is actually getting progress. Their revenue is growing up pretty massively. They're spending a lot now, but it hopefully pays off in the future. Tesla's the exact opposite. Their revenue is going down and their margins are contracting. Okay. At least Meta's revenue is going up. Tesla is a whole nother story. And yes, now they want to pack on debt. Okay. That's going to erode their margins even more because they're going to be paying interest. And if I was lending Tesla money, I'd have a pretty high interest rate because they don't make a lot of money. Their margins are already razor thin. Razor thin. They have a very low profit margin. You add some interest expense on top of that, it's over. It's absolutely over. But, you know, he's shocked that Tesla's borrowing money. Yes, they have to. Okay. They don't have a lot of cash flow from their operations and free cash flow to reinvest in the business. They can't. They don't make that much money. They have to raise capital. That's the only way they're going to do it. At least these other large tech companies actually make a lot of cash flow and can actually use some of it. They can reinvest into their own business. That's not Tesla, because Tesla is a barely profitable piece of garbage that has declining sales. Yeah, that's the difference there, Kevo.
they have $26 billion of free cash, and we know that their energy margins are 29%, and they're expanding their mega cap development or mega pack development processes, which is fantastic. Make great money with that. They've got cash. Building a mega or tera factory instead of a gigafactory or megapack factory, building a tera factory is probably going to cost Elon, if it's similar to the size of Elon or TSMC, $50 to $100 billion. After the CapEx doubling that they expect to spend this year, which part of will be rejiggering the Model X and Model S lines to make Optimus robots, and part of will be for Cybercab production, which we'll talk more about that in just a moment. Those expenses will lower Tesla's available cash, probably to around $20 billion.
All right, you know, guys, I have a prediction here, okay? I have a prediction. Remember how Tesla was like the innovator with electric cars, and they had first mover advantage, and their margins were going ballistic, and their sales were going ballistic? I predict the same thing could happen to Optimus. Here's what could potentially happen. The sales show up in the beginning going up a lot. The margins seem to be great because everybody wants an Optimus. Then a bunch of competition comes in and massively erodes Tesla's market share in the Optimus slime market. And then they go through the same freaking collapse in their profits and revenues that they did previously. They're just creating the same grift. Before it was EVs, at the end of the day, it was a failure. Now he's doing that with Optimus. Once Optimus does the same thing that freaking the cars were doing, he's going to find a new freaking grift. Whatever it is. I don't know. Mars rockets. There's going to be something. Okay? I'm telling you, the Optimus, the same thing's going to happen. They're going to have massive competition, and it's going to massively erode their margins. And we haven't even seen if the thing actually works. Does it actually work? I mean, we've seen some demonstration videos, but okay, that doesn't prove. You think I trust Elon's 10-second clips that he posts? Of course not. They're all manipulated clowns.
On hand as free cash, net of bills, by the end of the year. But $20 billion doesn't buy you a fab. Because the reality check is that when Intel in 2022 started building their two fabs, it took them $28 billion. And it took them almost, well, frankly, I mean, they're still building them. It's taking them about 9 years to get them done. Taiwan Semi, phase 1 took 5 years. Phase 2 won't be done until later this year. And Taiwan's complaining that it's TSMC is complaining it's 4 to 5 times more expensive than just building in Taiwan. And it cost them $65 billion. So this idea that Elon's going to go for a terafab that they don't have the money for is, to me, a little bit of an indicator that Tesla also is trying to find, all right, we're in an AI race. What do we want to do? Solar panels in space, that's big. Autonomous vehicles, don't have one yet, but we're going that direction. Autonomous humanoid robots, don't have them yet, but we're going in that direction. And in order to pay for, or like to create our fleet of autonomous human robots, which the God model of Grok is now going to run, because we now have a pact or contract agreement to license Grok to run this God army that we don't have yet. That God army is going to need so many chips that we're going to need our own fab to build not just logic chips, but memory chips. And to me, I'm starting to feel like, are these CEOs just distracted, not understanding?
No, Kevin. I think Mark Zuckerberg, he's made mistakes, okay? But I think he does have a long-term vision. Elon Musk is a con man who just creates a narrative to pump his stock so he can cash out and use it as a piggy bank. Are you seeing the fraud, the clownery here, Kevin? I hope so.
That if they focused on just the core business, they could probably make a lot more money. Instead of focusing on a heads-up display with Reality Labs at Meta or super intelligence models, while at the same time your executives on the earnings call are going, hey, we're actively trying to use and direct workflows to less expensive models so we can cut costs on the more expensive models, which I'm like, okay, but here you are trying to blow all this money on super intelligence, which probably isn't going to happen anyway. As a reasonable, I think, level-headed investor, I'm like, man, these people collectively run $6 trillion of companies, and they're freaking lost. Now, Microsoft may be the least lost out of all of them, but the problem is they're kind of held at the BALLS by other companies, and that's why their margins are compressing. Yeah, total revenue's up 16.7%, but their servicing costs for that revenue are up 25%. So their gross margin's actually compressing. So their costs of...
Wow, they're spending money on the AI revolution, and their margins are compressing. He's a genius. It's almost like we've heard this 1,000 times. Okay? He's acting like this is an insightful thing, that expenses are going up, that they're spending a lot of money on CapEx. Wow, I've never heard that concern about the AI investment cycle. I've never heard that before. Me, Kevin, is the first guy to see that large tech is spending lots of money on AI and he's concerned about margin pressure. Can I sign up for your beta report?
Goods sold, those inference costs are rising way more than what Meta's seeing, probably because they're trying to keep up with Anthropic. You know, there are rumors that the people over at Microsoft are freaking out that they've always been trying to get Copilot to just keep up with the other AI models. And now people are saying Claude is eating their lunch, integrating with Excel and otherwise. What do you need to pay a Copilot subscription for if you could just use Claude? So they're actively raising prices on their existing customers, blowing the rest of the money that they have. Now, in fairness, Microsoft and Meta do have money available to do this. Microsoft has $89.4 billion of cash. That's enough money to pay for all of their bills. And you can throw in another $56 billion for receivables, which starts taking off a chunk of some of their long-term debt. Meta's in a great place as well with cash. I've got 81.5 of cash, including, if you include receivables, you're at over $100 billion of liquid here. I've got $41.8 billion of bills, and then I've got long-term debt of 106. So it's going to take me about a year of cash flows to actually pay off all that long-term debt if I wanted to, and I use my cash to eradicate my debt. They just took on another $29 billion.
Meta's long-term debt is nothing. It is nothing. The interest expense is so low, it gets canceled out by the interest income on their balance sheet. Oh my God, what are they doing?
Dollars right here of debt, basically $30 billion of debt. You know, they're pre-spending their future cash flows on these ideas that I'm not sure are actually going to go anywhere. And so then we have to ask ourselves, well, what are the companies going to end up decaying down to?
Why do you not think they're going to go anywhere? Okay, I believe Elon ain't going anywhere. Why do you think these other companies aren't going anywhere? Have you seen the progress in AI? Remember the Will Smith thing where he's like the old one where he's like this deformed creature and he's like the pasta's going in his mouth. And then you see the improvements in the video quality 2 years later is absolutely mind-boggling. You don't think the spending now is going to keep improving that into the future? Yeah, it's like the Industrial Revolution. You know, we decided to mass produce things. I guess we have to build a factory. Okay, we're building all these factories and we're spending all this money on the factories. What are they doing? What are they doing? They don't understand what they're doing. They're taking on debt. Oh, they're lost. And then eventually the factory's done. And then the factory starts mass producing. And then you make profit from that. Like, he's such a clown, dude.
When and if some of these big expense plays don't end up working out. And so that's where I like looking at valuations. So let's go and do that. Let's go just pull up latest valuations. We have stock tab. You get this if you are a member of the Alpha Report. You can get lifetime access still. We're going to move to a monthly recurring model at some point this year. But a quick look at Microsoft. They were at, actually as of today, they're at a 1.77 peg, which is inexpensive.
That is... How can you even read this? What is this? Is this his little app? By my app, bro. Wow. Yeah, you're going to use your little phone app for in-depth stock analysis. For me, Kevin, to highlight a couple lines on a financial report. Wow, man, how much are you charging? I might sign up for this.
You know, they probably have about 50% upside for a fair value there. If I look at Meta, I put them at a 1.29, which is basically suggesting they have a 2x upside on their valuation. And if I look at Tesla, they have a 6 peg, which unfortunately a 6 peg for, I'll give them a servicer, even though they're substantially lower margin than these other businesses. Tesla has downside of about 56%.
No, Kevin. It can go a lot further than that. But it's my favorite stock. Wow. It's in my retirement account.
So the valuations are pretty clear that these companies are valuation-wise probably going to, Microsoft and Meta, they both actually have upside. Even though Microsoft is slipping down, people are concerned that, hey, like your margins are compressing, you're falling behind, and those revenues might not sustain. That's a risk with Microsoft, and if their earnings get written down, then their valuation growth won't be there. Meta, on the other hand, has this ultimate bailout tool of advertising. Because of artificial intelligence, they're actually making more money than ever before. Hand over fist more money with advertising. And they're killing it with advertising. Elon, on the other hand, has taken the largest transition and put the company, I think, into the riskiest position Tesla has ever been in. I mean, look at this. New car models, dead now. We're not doing new car models. We're just going to focus on autonomy because 90% of all vehicles in the future, miles driven, will be autonomy in the future. We're going to focus on killing the S and X. We're not doing those anymore. So buy one now, go on a way sale. And then we're just going to focus on the Optimus. Then we'll focus on a Terafab and Robotaxi. And we're going to leverage Robotaxi revenues to finance our Terafab. They said this on the earnings call. All this kind of stuff, not worried about it right now. Lifetime FSD, gone, because we want the annual recurring revenue. SNX, gone. New car models, forget about it.
Wow, it's almost like Elon just backed out of all his initial plans and promises. Shocker. And you fluff him constantly. Oh, my daddy, you're so rich.
Makes me a little nervous because what we're doing with Tesla is we're coring out the business that's doing really well to focus on things that we don't know will do really well. Look, I love that we got disclosure on how many people are.
That's the point, Kevin. That's what Elon does. He finds something that's exciting and visionary. He massively overpromises. People pump up the stock price. Eventually, he underdelivers, but it doesn't matter because now he's got a new thing that he's promising, so the stock just keeps going up. You're not seeing the cycle here, the cycle of the grift? Are you not seeing it? I can see it. Maybe I'm just special.
Paying monthly for FSD. 1.1 million, that's 330,000 monthly paying customers. That's $32.6 million a month. That's almost $400 million ARR. That's fantastic. However, we're also going to see margins decline, as we heard our CFO tell us, because they're not going to get these big upfront sales of FSD anymore where people are paying them $7,000, $6,000 or whatever in a basically 100% margin FSD product. So you're not getting those lump sales anymore. Now, of course, they butter those out over time, but still they might recognize that revenue over 2 years or 3 years, average lifetime that they think somebody would on average use that.
You know, that's interesting, Kevin. I'm curious about how you're going to recognize revenue for your AI venture. I saw some very interesting things in your report. You guys should go check out the video that I did covering his interesting way that he's going to recognize revenue for his house hack lifetime subscribers. Very interesting. Very interesting, Kevin. At least Tesla's doing it the right way. I don't know about you.
Car, average, could make sense, 2 to 3 years. However, they justify it. So you take a lot more revenue in. That's exactly, you recognize a lot more revenue. That's exactly why they warned that margins are going to compress on that FSD side. So a little bit, I feel confused. And that's what I want to say here, is that I see artificial intelligence making individual workers more productive, like what we're seeing at Meta. But I don't see this super intelligence bet as a good one. I don't think Copilot is a good one. I don't think building...
You don't think trying to achieve super intelligence is a good bet? Even if you had a 15% chance of getting it, super intelligence, I think that's, if you have all this money coming in from your ads, and if you could build super intelligence, yeah, I think that would be a good payoff in the long run, Kevin. That personally, yeah, okay. What is he talking about? Stop pursuing super intelligence. No, focus on your ad business, bro. Focus on your ad business, okay? Just to abandon all this AI stuff. Your margins are contracting. You're investing in AI and research and development. That means your margins are going down, bro. That's bad. That means AI is not working, bro. But your revenue is also going up massively. It doesn't make sense, bro.
A Terafab is a good one. These are companies with $6 trillion of American market cap. And I honestly think they're a little drunk right now. I don't know what's going on. Now, look, there's some things I don't look, some things I do like, some things I don't like about this Tesla thing. First of all, I hate that we're not going to have new models. But I get it because they're going to focus on Optimus. And we had a 50% decline in, right here, 51% decline in our SX and Cybertruck deliveries. That's terrible. So I get why they're deprecating it. But the thing is, we're killing off what at least is making some revenue for the Optimus, which right now Elon says there is no Optimus that's doing anything functional. They're all in R&D.
No, Elon is correct, Kevin. I understand how his brain works. I understand the con. The only thing that's going to save him is Optimus. The promise of Optimus, to be specific. So yes, Kevin, if Elon abandoned Optimus, Tesla would collapse 90%. What are you? You're giving the worst possible advice. You understand this. You know Elon's a little stock pumping con man. Why are you telling him to stop his con? If you stop his con, the stock collapses. Meta's got to stop investing in AI because they spent a lot in R&D, bro. Yeah. Microsoft, I mean, massively growing revenues. They need to stop too. Just stop. We should just abandon AI, bro, because the profits right now are not good. We'll see, Kevo. We'll see.
Project. Not only are they all an R&D project, But every time we make a new one, we deprecate the old one. So we're kind of just trying to move incrementally one robot at a time. And all these ideas about, oh, we're going to do, 1 million robots a year or whatever, they're not ready to ramp up the scale anyway because we don't have a finished R&D product. That's the problem. So, look, I have to say.
How do you get an R&D product? Do you have to perhaps spend money on R&D? Maybe. I don't know. This is the dumbest analysis. He's basically just saying they're spending a lot of money. We knew this, Kevin. Who doesn't know that? Yes, they're spending a lot of money. The bad thing is if they do all this CapEx and it doesn't work out in the long run, then yes, it's bad. But the fact that they're spending money now doesn't necessarily mean it's bad. Okay? This is not rocket science. We're just hoping, and I'm hoping, because I want my stonks to go up too, but I also want them to go down a little bit so you guys can freak out and I can make fun of you. But in the long run, I want my stocks to go up, okay? And I'm hoping that all this investment in AI will make us more productive. I think AI and robotics is the only thing that's going to save us. You look at birth rates around the world collapsing. We're gonna need AI and robots. Yeah, and if we don't, we are gonna have a serious economic contraction or depression over the next couple of decades because of demographics. We need this. This will save us. Now, just focus on your ads. Well, focus on the Model Y. Whoa.
Yes, vehicle margin impressed to the upside. Some of these earnings numbers, sort of like the boring kind of giddy mathy stuff, fine. But Elon also made it clear that there's no competition outside of China. But the problem is China is the cheapest place to mass manufacture robots or cars or whatever. They're in a deflationary depression, basically. They'll manufacture almost for free just to keep their lines working. I'm obviously being a little facetious there. But I don't know if those are the places to compete in, especially by the time Elon, if he goes for making a terafab, which he sounds convinced in because he wants to hedge for geopolitical risks that haven't happened yet. They might happen, but we still haven't proven we actually need the chips because the Optimus isn't actually fully designed yet. Now we're going to hedge for these geopolitical risks, build a terafab. By the time that's done, memory chips from SanDisk or NVIDIA will probably be a commodity because it's going to take them 6 to 8 years to do this. All of that makes me nervous. At the same time as the CFO says, yeah, we're gonna start financing our robotaxi revenues to pay for the terafab. Well, again, at the same time, Elon says he's thinking about selling shares to pay his fair share of taxes. He's not trying to sell shares to pay his fair share of taxes.
He's such a liar. I'm just selling my shares because I want to help. Yes, it's not because I want to take money out of my piggy bank fraud company. No, it's because I want to pay my fair share. Yes. Oh, yes. Oh, hey, is that your secretary? Is she single? Can I impregnate her? Oh, she doesn't want me to impregnate her? Oh, you're banned from X. Oh. I'll unfollow you.
Sell shares because they're at near all-time freaking highs. And he needs to raise money to feed Grok. Stock compensation at Tesla, mind you, was higher than expected at $682 million. That's up from the prior quarters, 428, 443, 459. It's easier to pay people in stock comp right now. Why? A, because the stock is high. B, because you could add it back into your adjusted EPS. Why do you think Tesla beat adjusted EPS by 5 cents? So they just added back in the stock compensation. They paid like 50% more in stock comp than last quarter. End of the year bonuses, I guess. Those are nice bonuses. 682 divided by 459 is 48 points.
If you're a shareholder of Tesla, which unfortunately I am as well in VT, those stock options they're giving out now, if they start buying back stock at these valuations to keep the float stable, it's gonna cost an ungodly amount of cash. Oh my God. Woo! Look at that. Look at that smile. If you were walking down the aisle in Target and you saw somebody smiling at you like that, would you be afraid? I think I would scream and run away if I saw somebody smiling at me like this man is smiling right now.
Well, hey there, Chris. Wow.
6% more. Energy margins are still great, 28.6%. We're still developing more superchargers, which was great. I'm glad we're doing that. At least we have positive growth of charging infrastructure versus the vehicle growth. But at the same time, this pact with XAI, to me, is not actually a big beneficial move to Tesla, even though they have the Grok app in the car. Okay, big deal. Every car now has some assistant in the car. And in the future, other cars will just plug in probably a GPT model or Claude model or whatever. I honestly think XAI just needs money to keep staying in existence to pay for the inventory. And you're seeing the same thing at Microsoft. Their accounts payable are exploding. If you go to Microsoft and you look at their payables, you can kind of see this drunkenness in all of them. Take a look at this. It says here, they've got 18.6 billion in property and equipment still in accounts payable.
He's looking at their accounts payable. That's short-term bills that are due. Sometimes that fluctuates because when you report, your report ends on a certain date of the year. So in some reports, you might have a lot of accounts payable. And in some reports, you might not have a lot. It's a timing issue. He's looking at their accounts payable. You're worried about Microsoft's accounts payable? Mike, you're worried about Microsoft's accounts payable. That's your concern. And you know the accounts payable already hit the income statement. You know that, right? Yeah, it's an accrual. So it's already reflected in the profit and loss. Their accounts payable. Wow, my God. Wow.
So bought and not paid for. Someone has that inventory. Well, guess who had a spike in inventory in the last earnings report? NVIDIA. So, maybe that's because Microsoft isn't ready yet to install those NVIDIA chips, but they're spending money before they have room or the capacity to actually install these chips. Microsoft is just trying to play catch up. I don't know that they're doing it well, and in doing so, their costs are going way up. Meta is blowing money, even though they got a really good business, and Elon can't find direction. So I'm nervous. I do think these companies, Microsoft and Meta, will eventually decay to where they go, you know what, we just need.
If you're watching this video, if you watch this guy, he's constantly panicking. Wow, I'm bearish. Wow, I'm bullish. Wow. Buy and hold for the long run. How many times do I have to say this? But that's probably the 10,000th time I freaking said this on this channel. Okay? You watch this nonsense, you're gonna be freaking out. Because he's constantly bullish, bearish, bullish, wow, bearish, wow, bullish, wow, 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 wow. Wow. I wonder if my neighbors can hear me. What is he doing?
To stop spending on super intelligence and trying to compete. Let's just integrate. So Microsoft will integrate rather than compete. Meta will stop spending R&D at some point and focus on ads, and they'll do well there. Elon, it's roulette. This is Elon roulette that we're playing with a massive company. And I don't know how I feel about it because I really love Tesla and I want to see Tesla do really well. But I'm not convinced that the Cybercab and Optimus Robot are going to be a reality.
Wow, what an insightful video. Microsoft's accounts payable went up. Elon's a moron. Shocker. He's a con man. I'm in shock. Meta's R&D expenses are up. Wow. Oh my God. Sell. What a freaking clown. All right. I did see 2 Venmos come in. So let's see. I'm going to get those at the next, the e-begging stream. If you're okay with that. I know. Can you wait a day? Because I want to focus on Kevin in this video. But I got 2 Venmos, and we will cover both of these tomorrow at 5:30 p.m. Okay. And I will hit those 2 first thing at 5:30 p.m. tomorrow. I can't do the e-begging stream tonight because I have 2 Rugrats in my freaking house tonight. So, but thank you for your Venmos. I saw both of them, and we will address both of those starting at 5:30 p.m. tomorrow. Don't sue me, bro. Tips request. Yep, you guys saw that. Ryu, what's up, Wesley Mitchell? How's it going, bro? AI, my hot guy. Alan Carlson, I thought you were too busy to do the clown report. Sorry, your tax business is collapsing. I don't know. People have been paying me. It's weird. No, but no, it is kind of a lull. So my plan is I'm going to do the market open and close every day during the week, obviously. And then when I have time, I'll do the daily clown report and the e-begging stream. But it really depends. Like if I start getting a flood of emails and questions and people are ready for me to file their returns, I'm prioritizing those. But right now, it's a kind of a lull. I'm just waiting on people to email me, blah, 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 blah. But tax season's really going to kick off next month. Oh, baby. Everybody's waiting on their brokerage accounts, including me. Once those brokerage accounts come in, oh, daddy. Daddy, 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 daddy. It's going to get crazy. Oh, and I closed my first local client last night or 2 nights ago. Pretty good. Proud of myself. I don't have many locals in this business. Prayers for that's pretty good. Alan's conquering the world right now by watching my streams all day. I don't know about you, but I don't want to meet Kevin. Oh, I would have a drink with me, Kevin. I think he's a wild party animal. Kevin was shilling in phase at 300. Check it out now in the 30s by the dip. He's such a clown, dude. Was in phase that little go-kart Kevin was driving. No, that was Arcimoto. I remember that. I'm pretty sure Arcimoto. I think it's ticker symbol FUV. Hold on a minute. Let's see. Yeah, he was like driving down the road in this stupid go-kart.
Wow, it's the future, bro.
Why is the stock not coming up? FUV stock. Above stock chart. Hold on. Oh, it's FUVV. Okay, Arcimoto Incorporated is trading at 0.0001 cents. I guess it went bankrupt. Wow, Kevin, thank you for shilling that on your channel. In phase is the solar panels that make 25 to 30 years to break even on. Meet Kevin's mobile app costs $250 a month. Who is paying that? You people, man. Oh, that's also Rainbow. Meet Kevin takes in the margin daily, loves the banana in the donut. Feels so good. Someone says they haven't been in this ADHD channel. I don't have ADHD. What are you talking about? Do you still cover House Hack quarterly results, or did Kevin scare you real good? Yeah, I totally haven't talked about House Hack at all recently, okay? I don't think there are any things for House Hack. Let's go look. Let's go check out House Hack on the SEC website. Okay. You ready to look, people? You ready to see if we can find House Hack? Hold on a minute.
House Hack.
House Hack. All right, here it is. No. No, the last semi-annual report was in September 29th. So we might not even get one until what, March? Yeah, I mean, there's really not much going on. I mean, he filed his freaking stock options. This amendment he did and his plans for how to record revenue for people that bought lifetime memberships, a little grifty there, Kevin. I know what you're doing. I see what you're doing. I'll never understand why Kevin has 78 kids and then pays a team to people. I mean, he's so wealthy, he could just retire and focus on his kids, but you know he's not going to do that. What's your stock picks? Oh, Alan charges money for investment advice. Yeah, you pay me to listen to you give me financial advice. Bet is 50% Fubo and 50% Bonk Coin. He actually holds an international ETF. Oh, he's an international now, guys. He's an international. I saw that. We will cover that in the next video. Yeah, I just don't want to do it now. I'd rather do it during the market open, or excuse me, the e-begging stream tomorrow. Come on, Steve. Don't waste your money. Too late. I know. He's never going to recover from that. You just paid someone $9 to talk to an AI bot and tell you to just buy PT. No, I actually do look at the financial statements. Okay, I can actually read financial statements. Yeah. I bet you'll catch a lot of things you didn't know about a company just looking at their financial statements. My neighbors be like, he's reviewing again. Yeah. My neighbors like, the guy's a freaking maniac. No worries. I can wait. Yeah, I just rather do it during the Daily Clown Report. The e-begging stream. House Hack. All right, guys. Well, thank you for your donation. Oh, I got a question here, a tax question. Why does it take so long for brokers to issue 1099s? Are they making them by hand or something? I don't know. I mean, but that's why tax season doesn't really kick off until February. I mean, you have like corporations that, they can get you their books and you can do their corporate, or you can do their S Corp, their C Corp, partnerships. You can get those done pretty fast, like right after January starts. But when it comes to like individual taxes, you usually got to wait till February or March sometimes before people start coming in. So I'm patient. Daddy's patient. And I know it's going to come, baby. I know the money's coming. I'll do a summary of all my income. We'll probably do it this weekend. Anyway, like, subscribe. Consider joining as a member to support the channel. Also consider booking a free, and I mean free, 30-minute tax consultation with me. I am a certified public accountant and would gladly do your business and or personal taxes any state in the United States. You can talk to me for free. I give you upfront fixed quotes, and I'll do your taxes like a boss. You can book a free 30-minute consultation in the pinned comment below at the conclusion of this live stream. Every single one of my videos has a pinned comment, and that first link takes you right to my booking kit page. It is a free 30-minute consultation, and you will get an upfront fixed quote. That's right, people. All right. See you guys later today. Cheers.